also get in Aditya Khemka, fund manager at Incred Asset Management. Aditya, good morning and welcome to NDTV Profit. Always a pleasure to speak to you. Do you also think that pharma as a sector is now vaccinated against not the tariffs, but Trump, taking into consideration the way things are moving 200%, 1.5 year? How are you looking at it?
Yeah, good morning and thanks for having me. No, I couldn't agree more. I think the sector is definitely not, vaccinated when it comes to tariffs, but it is definitely now seems immunized to what Trump is saying. I think pharma has now become a part of the taco trade. Trump always chickens out trade. So I don't think investors are now going to react to any more threats. As your colleague anchor also said, once you have heard a threat too many times, you stop reacting. I think that's where we are today in pharma.
Aditya, to take that conversation forward, hi, morning, Alex here. I'm just wondering whether these dips, if any, and today are not seeing any, the stocks are mostly higher, but dips, if any, would be buying opportunities considering that you've seen a little bit of an easing off in some of these prices.
Yeah, so look, buying opportunity is not at a sector level, it's always at a stock level. So there are stocks I'll be happily buying even at today's prices or even 5 or 10% lower, obviously. And there are stocks which need to correct 30-40% before I can even think of buying. So when you say, dips, the counter matters because pharma, as you know, has multiple buckets into it. So you're not definitely gonna say that, you can buy anything and everything at a correction. You need to be stock specific in pharma.
Where are you focusing then, Aditya? And I wasn't meaning to ask you about a sector buy as a whole, but where would you be focusing?
So today I'll be more focused on domestic pharma. I'll be more focused on CDMO companies, which do a large part of their business with innovator big pharma companies globally. And I would also be focused on hospitals and diagnostics focused on India. So I'll have less inclination to buy companies that are selling generics into US, simply because the economics of that business currently doesn't work out to be value accretive for the investor.
Well, Aditya Khemka's views now are translated well. He doesn't like these US generic exporting companies, but more domestic focus and more the other aspects of the healthcare space. But Aditya, just wondering, now I'm trying to understand the negative here, that if indeed, I mean, the threats are over 1.5 years away, but he might keep on saying things in between. And if indeed there is a higher form of tariff coming in, does it reinforce your negative view fundamentally as well, that these stocks, if they are in the portfolios, should be maybe replaced with other forms of healthcare investments?
So let's hypothesize, because this is a hypothetical question.
Agree.
So hypothetically, there are two ways this can play out, right? Number one, let's say Trump imposes a tariff, 10%, 25%, 200%. God knows what percentage he'll end up imposing. So hypothesis one, he imposes the tariff. A part of the tariff has to be absorbed by the manufacturer, and rest of the tariffs have to be absorbed by the consumer in the US or the insurers in the US, whoever ends up paying for it, right? In which case, obviously, all of these stocks are a sell because their margins are already thin in the geography. And then if they further sort of absorb any part of the tariff, then their profitability is going to further go down. And that's going to really, really hurt the stock prices and the financials that these companies report, the cash flows that these companies report. So that's hypothesis one. Hypothesis two, if I were to just turn the entire story around and say that if they impose such high tariffs, nobody will be willing to sell to the US market if they are asked to absorb any part of the tariff, because they're already at very low profitability. So if they stop selling, then you have a shortage situation, and then drug prices will actually go up. And then some of these generic pharma companies will actually benefit from higher drug prices. So hypothesis one, hypothesis two, I don't know what will play out because it's just such a hypothetical situation at this point. My simple input is that when we as fund managers look at stocks to invest in, we look at a risk reward, right? Now, the fact that the Trump has been harping on this and it will probably continue to harp on this for the next year or so increases my risk in the stock. But has the reward in the stock gone up? The reward in the stock would go up if the stock were to correct by 10, 20, 30%. That just hasn't happened. So my reward hasn't gone up, but my risk has. So it just makes sense to avoid it at this point.
That's such a nice way to put this, and Aditya, trust you to do that. So great, thank you for agreeing at such a short notice to speak to us, Aditya. But this just encapsulates the actual impact or the possible impact of this so well. The risk has gone up, the reward hasn't, and therefore, why would you want to take that chance with the generic makers? Appreciate your time, Aditya. Thank you so much.